Hi everyone! Welcome to the next module, Module 2 of Financial Accounting and Reporting. This is entitled Analyzing and Summarizing Business Transactions. At the end of this module, the student should be able to analyze types of business and forms of business organizations, explain concept and characteristics of business transactions, identify different source documents, enumerate and explain the elements of accounting, analyze the accounting equation and effects of transactions, and lastly, identify the guidelines in preparing financial statements. So let's start the discussion with the types and forms of business. Business entities can be grouped by the type of business activities they perform. Okay, we have here the service business, merchandising business, and the manufacturing business. Okay. For service business, this type of business provides various forms of services, okay, not tangible products, okay, to their customers or clients. Some examples of this, okay, that render services are the repair shops, okay, the banks, schools, hotels, okay, insurance companies, and many more. So this service business recognizes income in the form of fees, okay, rents, interest, royalties, retainers, or commissions. Okay. The next type of business is the merchandising, okay, business. This type of business entity is in the form of buy and sell. Okay. A trading or a merchandising enterprise buys ready-to-use products such as appliances, okay, motor vehicles, toys, clothing, apparels, okay. It then sells these products to end consumers at higher prices. So, yun yung form na tinatawag natin, buy and then sell. And then, the last type of business is the manufacturing business. Okay. Unlike a trader or merchandiser, okay, ang tawag natin dito, no, manufacturer. They are also called the producer or the processor. Okay. A manufacturer had factory facilities where he produces finished goods out of the resources like raw materials and other supplies by applying the labor and other manufacturing cost. Okay? In simpler explanation, the manufacturing companies buy materials, convert them into products, and then sell the products to other companies or to the final consumers. So those are the three types of business. And then the other side of this presentation, we have here the three forms of business organization. Okay, we have the sole proprietorship, partnership, and corporation. Okay, accountants or bookkeepers need to understand the three basic forms of business organization. Okay, so let's discuss first the sole proprietorship. Okay, a sole proprietorship is a business owned by one person. Kaya sinabi nating sole. Okay, this form of business gives the proprietor a means of controlling the business from his personal interest. Okay, and the life of a sole proprietorship ends when the owner wishes it or at the owner's death or incapacity. And then later on, other explanation for these disadvantages and advantages of having this form of business organization will be explained. Okay, on the next one, we have there the partnership naman. Okay, partnership. Okay, as defined in Article 1767 of the Partnership Law, okay, by the contract of a partnership, two or more persons bind themselves to contribute money, property, or industry to a common fund with the intention of dividing the profit among themselves. Okay. So meaning, a partnership is like a proprietorship in most ways, except okay, that it has more than one owner. So kanina sa sole proprietorship, one owner, but in here, meron na siyang more than one owner. Okay? And then, a partnership is an association that brings together the talents and resources of two or more people. Okay? And then the last one, the forms of business organization is the corporation. Okay. According to Batas Pambansa 68, Section 2, okay, otherwise known as the Corporation Code, okay, a corporation is an artificial being created by operation of law, having the right of succession and the powers, attributes, and properties expressly authorized by law, okay, or incident to its existence. So this form of organization, okay, it is legalized separate from its owners. Okay, ang mga owners naman natin dito, tinatawag nating corporators or stockholders or the members. Okay? So those are our forms of business organization. The next topic is about the business transactions. So from Module 1 class, we have already discussed the meaning of this business transaction, which simply defined as the exchange of goods or services. And we have the three characteristics to be able to be called it as a business transaction. Number 1, it must be for a sum certain in money. Number 2, it must be supported by a genuine source document. And number 3, it must have a twofold effect on the elements of accounting. So, and then, in the presentation, okay, I have provided 10 examples of these business transactions. Okay, these are the usual business transactions, okay, of a company. Okay, number 1, mayroon tayong investment of cash, okay, and or other assets by the owner or the owners. Okay, number 2, withdrawal of cash, okay, or other assets by the owner or the owners. Okay, number 3, borrowing of cash for business use through issuance of promissory note. Okay. Counting element there is a liability. Payment of promissory note, again, liability. Sale of goods or services to clients, either cash, okay, or on account. Okay, collection of AR, so that's from the ang effect niya is for the assets, collection of promissory notes, acquisition of assets or services, okay, either by cash, on credit, or issuance of promissory notes. And then if ever, meron tayong mga purchases on account, we have also the payment of accounts payable. And then lastly, consumption or expiration of assets, okay, such as expired insurance, supplies used, and etc. So, as you can see there, a particular business transaction may lead to an event or condition that constitutes another transaction. Okay. Say for example, okay, we have purchase of merchandise on account. Okay, it will be followed by, okay, another transaction which is payment to the creditor. Okay, and each time a portion of the merchandise is sold, another transaction occurs. So, class, those are events, okay, or transactions which must be recorded. One of the characteristics of a business transaction, okay, is supported by a genuine source document. So we need to discuss the information or some reminders, okay, before transaction can be recorded. So meron tayong A to H dyan. Okay. But first class, all business transactions that are taken up in the accounting records should be supported by these source documents. Okay, dapat appropriate yung source document natin. Okay. It is necessary that reported information can be easily traced back to the supporting evidences. Therefore, it is important that all source documents are properly prepared, compiled, and controlled. So class, all documents must contain the following information before the transactions can be recorded. So the transaction should have the date, the document name and number, the name and address of the business firm, the name of the other party involved in the transaction. Okay? It can be, or they can be, the payees, payors, customers, suppliers, and even the creditors. Okay? And for the source documents, amount in words must be printed, handwritten in capital letters, and the word only is indicated at the end of the amount. So, meron tayong example dyan. Okay. Next, amount in figures must be written with a peso sign and 2 zeros or a dash. Should be indicated as centavos if the amount is a whole number. And then, the signature of the person who prepared and or approved the business transaction must be authorized. Okay, like the general manager, the cashier, and the owner. And then, the signature of the other party involved in the transaction if necessary. So, meron tayong mga examples na source documents dyan. Okay, number 1, the official receipt. Number 2, the cash vouchers. Number 3, the petty cash vouchers. Number 4, checks. And then you also have the statement of account. Accounting is governed by a fundamental accounting equation. So that is assets equals liabilities plus the equity. It is the most basic tool in accounting. Okay, it shows the relationship of the three accounting elements found in the balance sheet. That is why this accounting equation is also called the balance sheet equation. And it is the foundation for the double entry bookkeeping system. So for each business transaction, the total debits must be equal to the total credits. As you can see there, in its capital, it is increased by the investments and the revenues, while it is decreased by withdrawals or the drawings and the different expenses. Okay, later on, we will be discussing one by one these three elements of accounting. Okay. together with the revenues and expenses. In order to understand better the effects of the accounting equation to the financial position and results of operation of a business enterprise, the relationship of the accounting elements should be clearly defined. So there are 5 basic elements of accounting, which are always present in every accounting service. Okay. These 5 elements are the assets, liabilities, equity or capital, the income, and expenses. Okay. So, for the assets are resources, okay, controlled by the entity as a result of past events, and from which future economic benefits are expected to flow to the entity. So that's the previous definition of the asset. But according to the International Financial Reporting Standards, okay, and based on the project summary, the revised definition now of the asset is a present economic resource controlled by the entity as a result of past events. So simply means assets are the resources, okay, which the businesses use to conduct their activities. An item becomes an asset when you own it or have the right to use it. Okay, asset provides economical support to your business. Okay. So meaning asset serves some economic benefits to the business either in terms of cash or credit. Okay. The next element is the liability. Previous definition of a liability, okay, it is a present obligation of the entity arising from past events, the settlement of which is expected to result in an outflow, okay, from the entity of resources embodying economic benefits. Okay. For the next or the revised definition of a liability, a present obligation of the entity to transfer an economic resource as a result of past events. Okay. Simply means a liability are group of items which are the obligations to the business. Okay. So when we have some purchases or take a loan for the business, they are our liabilities. And to settle these liabilities, okay, we need to settle the assets. Okay, the third element of accounting is what we call the equity or the capital. Okay, equity or capital, the previous definition is the residual interest, okay, in the assets of the entity after deducting all its liabilities. Okay, there's no change, okay, with regards to the IFRS project summary of the conceptual framework. So, owner's equity class is the capital by the owner of the business to conduct his business activities. So, yun siya. It includes all the ways through which those resources make the business function properly. Okay, for the fourth elements of accounting, that is the income. Okay. Previous definition, increases in economic benefits during the accounting period in the form of inflows or enhancements or decreases of liabilities that result in increases in equity, other than those relating to contributions from equity participants. Okay, but for the revised definition, income increases in assets or decreases in liabilities that result in increases in equity, other than those relating to contributions from holders of equity claims. So in other words, class, income is what comes when the company sells their products or deliver their services. Okay? So, yung result niya, based on the definition, it increases the assets and decreases the liabilities. Okay, for the last element, we have the expenses. Previous definition, class, decreases in economic benefits during the accounting period in the form of outflows. Outflows naman siya. Or depletion of assets or incidences of liabilities that result in decreases in equity other than those relating to distributions to equity participants. Okay, but for the revised definition, okay, expenses, decrease in assets or increase in liabilities that result in decrease in equity other than those relating to distributions to holders of equity claims. Okay? In other words, for these expenses, okay, we have lots of examples of these expenses. They are the unavoidable events. Hindi natin maiwasan when we have that what we call business operations. Okay? For a period of time, expenses reduces our assets and increases liabilities. So, class, in general, okay, based on the presentation, our elements of accounting from previous definitions up to the revised definitions, there's what we call refinement. Okay? Refinement because from those previous definition, we have some what we call improvement, okay, for the new definitions of those elements, asset and liability. But for income and expenses, okay, inalign lang ni income and expenses yung revision nila to the asset and liability. But for equity and capital remain, okay, walang nagbago. So take a look at this presentation. We have here the elements of the accounting, okay, together with their classifications, sources, and examples. Okay, discuss natin yung sa assets. Current assets include cash and those assets which can be readily converted into cash or sold or consumed within 1 year or the normal operating cycle, whichever is longer. Again, within 1 year or normal operating cycle, whichever is longer. The normal operating cycle refers to the time span during which cash is used to acquire goods and services, which in turn sold to customers, who in turn pay for their purchases with cash. So, common examples of current assets are the following. So, tawag natin dyan C-trip. Okay, if the problem is silent, C-trip are current assets. So, mayroon tayong cash, trading securities, okay, receivables, inventories, and prepaid expenses. Non-current assets naman, okay, it include tangible, intangible, operating, and financial assets of a long-term nature. Actually, any asset that cannot be classified as current should be classified as non-current. Examples of these non-current assets are the fixed assets, which is called or also known as the property, plant, and equipment. We have also the long-term investments, the intangible assets, and then other non-current assets. Okay. For our liabilities or the obligations of the business, it is also classified as current or non-current. Current liabilities include obligations which are expected to be settled in the normal course of the enterprise's operating cycle, and obligations which are due to be settled within 1 year from the balance sheet. Okay, examples of current liabilities are accounts payable, notes payable, the utilities payable, taxes and licenses payable, the other government mandated payables like withholding, SSS, PhilHealth, and Pag-ibig. And then we have also unearned revenues and then accrued expenses payable. For the non-current liabilities, according to Philippine Accounting Standard number 1, the non-current liabilities state that all other liabilities should be classified as non-current liabilities. Examples include long-term notes payable, bonds payable, and then the mortgage payable. The third element of accounting is the capital. Capital is the residual interest in the assets of the enterprise after deducting all its liabilities. So in short, capital is asset minus the liabilities. So it is the owner's contributions to the business. Other term for capital is equity. If it were a sole proprietorship, the term owner's equity would be more appropriate. Okay, but if it is a partnership form of a business, okay, it can be referred to as partner's equity. But if it is corporation, okay, it is referred to as stockholders' equity or shareholders' equity. So we have two sources of capital from the net investment and net income. From the net investment, okay, that is investments less the drawings. But for the net income, that's simply the revenues less expenses. The last two elements of accounting present in our income statement are what we call the revenues and expenses. For the revenues increases in economic benefits during the accounting period in the form of inflows. That is from the definition of the IFRS conceptual framework. Common examples of revenues are the service revenue or professional fees, rent income, interest income, commission income, sales, and many more. For expenses decreases in economic benefits. Kaya ang sabi natin, this is an outflow of resources. Common examples of these expenses are advertising, communications, delivery, depreciation, insurance, interest, rent, repairs, representation, the salary, supplies, taxes and licenses, utilities, purchases, freight in, and cost of goods sold. For this presentation, class, we have here the detailed information of the different elements of accounting, together with the definitions of the examples given a while ago. So for the assets, under the classification of current assets, we have the cash. Normally, it consists of coins and currencies on hand, money orders, and some checks from customers and deposits in bank accounts. Trading securities, also known as temporary investments. Okay. Since temporary, these are short-term investments of funds which are available for current operations and intended to be held for not more than 1 year. So that is why it is classified as current. Receivables, we have accounts receivable, notes receivable, and other receivables. Okay. Don't forget, pag sinabi nating receivables, these are our collectibles from the customers. Okay? For accounts receivable, these are collectibles from customers arising from sale of goods or services. Okay? Without any formal written promise to pay. But if there is a formal written promise to pay, okay, ang tawag naman natin dyan ay notes receivable. And other receivables like accrued interest receivable, advances to officers and employees, and dividends receivable. So for receivables class, meron tayong tinatawag na contra asset account. Okay, that is what we call the allowance for doubtful accounts. Okay. The fourth example of current assets are our inventories. Inventories are assets that are held for sale in the ordinary course of a business. So, di ba, we have the three business types. Okay, we have the service, the merchandising, and the manufacturing. For service, simply, tawag natin doon is inventory. But for merchandising firm, the title merchandise inventory is used. But for manufacturing business, inventory accounts include three. Okay, we have the raw materials inventory, work in process inventory, and finished goods inventory. Then last example for the current asset are the prepaid expenses. Okay, these are expenses paid in and recorded as assets before they are used or consumed. Okay, examples for these expenses paid in advance include the prepaid rent, prepaid insurance, and prepaid advertising. So again, para mas clear, prepaid expenses are assets, okay, paid in advance, okay, but still unused or hindi pa siya nakukonsumed. Okay? Non-current assets. Okay. For the non-current assets, common examples of this are the fixed assets, also known as our property, plant, and equipment. Okay, it includes, among others, the land. Yung land natin, those are lot or real estate owned and used by a firm as the building site, parking area, and other business operation. Take note, land, hindi po yan nagde-depreciate. It appreciate. Okay. In comparison with other fixed assets, si land lang po ang hindi subject for depreciation. Another examples of fixed assets are building and equipment. Building and equipment are subject to depreciation. Okay. So when we say building, these are structures used to house the office, store, or factory. Equipment, it includes, among others, machinery, furniture and fixtures, office equipment, store equipment, and delivery equipment. Say, for example, when you purchase calculator or computers, you have to record that one as part of your office equipment. When you record it, that's, okay, cash, debit, office equipment, credit, cash. Another, when you purchase some chairs, tables, okay, you record that one as furnitures and fixtures. So, since sabi natin kanina, building and equipment are subject to depreciation, we have what we call the accumulated depreciation. So, that is a contra asset account. Okay, representing usage of asset or expired cost of the asset up to the present. Another example of non-current assets are the long-term investments. Okay, these are assets held by enterprise for the accretion of wealth through distribution such as interest, royalties, dividends, rentals, for capital appreciation, or for other benefits to the investing enterprise. So we have investment in stocks, okay, investment in bonds, and fund for non-current purposes. Another non-current asset is the intangible asset. Okay. It is identifiable non-monetary asset without physical substance held for use in the production or supply of goods or services, for rental to others, or for administrative purposes. They are long-lived assets without physical characteristics and whose value lies in the rights, privileges, and competitive advantages that they give to the owner. So, meron tayong tinatawag na patent, exclusive right granted by the government to an inventor, copyright, exclusive right granted by the government to an author, trademark, this is a symbol, sign, or name used to mark a product to distinguish it from other products. And then franchise, a right or privilege granted by the franchisor to a franchisee. Included in the intangible assets is the goodwill. Key goodwill, value of all favorable attributes that relate to a business enterprise, like the good name, capable staff and personnel, high credit standing, the reputation, and etc. And then for other non-current assets, okay, these are other long-term items which cannot be appropriately classified under the usual asset categories. Kaya na-classify sila as other non-current assets. So, meron tayong A dyan, advances to officers and employees, not collectible within 1 year. So, hindi siya pumasok as current. Therefore, ilalagay natin as other NCA. Letter B, restricted cash accounts. Ibig sabihin, hindi natin yan mako-consume. Okay? Those are cash enclosed banks. Therefore, part na rin siya ng other NCA. Long-term installment receivable, since installment, that is for a longer period of time, so considered as other non-current asset. Okay, same with non-productive property or property no longer used in operation. So, nagiging idle na sila for some years. Okay, considered na sila as other non-current asset. And then, the damaged inventory, not yet declared as loss of the enterprise. Nakastock lang sila. So, hindi sila held for sale within the normal operating cycle. Okay, part sila ng other non-current assets. Okay? So, for the next element of accounting, the liabilities, we have also two classifications. Okay, unahin natin i-discuss yung sa current liabilities. Okay, they are expected to be settled in the normal course of the enterprise operating cycle. These are the examples of current liabilities. We have the accounts payable. So, saan manggagaling yung accounts payable? Okay, from purchase of goods, materials, supplies, or services in an open charge account, and it is not evidenced by any written promise to pay. Okay, but if there's a promise to pay, dun tayo sa notes payable. Communications payable, okay, those are obligations to companies for postage, telephones, telegraph, kung meron pa, and similar services. Utilities payable, okay, obligations to utility companies like electric companies, okay, water companies. Taxes, licenses payable, okay, payables to the government in the form of transfer taxes, income, and business permits. So, number 6, our government-mandated payables, we have the withholding, SSS, PhilHealth, okay. These must be complied to the Bureau of Internal Revenue, the SSS, PhilHealth, Home Development Mutual Fund. Other examples of current liabilities are unearned revenues and accrued expenses. Unearned revenues are obligations for goods or services that a company must provide or deliver in future accounting period in return for an advance payment. So, meaning they have already collected cash but no service at all. So, they are termed as unearned revenues. In case, meron tayong unearned interest income, unearned rent income, and unearned subscription revenue. For accrued expenses, also known as accrued liabilities, these are expenses that have been incurred but not yet paid. Okay? Like in the case of accrued salaries payable and accrued interest payable. Since expense na yan, okay, may obligation ka na to pay, but then, hindi mo pa siya nababayaran. Okay, so tawag natin dyan, accrued expenses. The second classification of liabilities are non-current liabilities. Examples are long-term notes payable. Okay, these are obligations evidenced by promissory note to be paid beyond 1 year. So, pag beyond 1 year, classified na sila as non-current. Bonds payable, these are liabilities supported by formal unconditional promise. Okay. Under the seal to pay specified sum of money at a determinable future date and to make periodic interest payments at a stated rate until the principal is paid. Ang tawag natin dyan, bonds payable. For mortgage payable, they are long-term obligation to a bank or other financial institutions secured by real properties of the business. The third element of accounting is the capital or the equity. So, ang term natin dito, residual interest. Okay, sources, na-discuss natin yan kanina, from the net investment and from the net income. Important reminder, kapag sa sole proprietorship, ko-consider natin yung name of owner capital. Meaning, kapag magre-record ka, say for example, ang owner ay si Jean, ibig sabihin, ang ilalagay mo sa journal entry ay Jean Capital. Same with the drawing. If ever may withdrawal si Jean, meron siyang Jean drawing or Jean withdrawal. Okay? So, discuss natin yung sa income or revenue, which is number 4 element. Income and revenue, di ba? Meron tayo increase in economic benefit. Examples are service revenue, professional fees, income from fees. Ibig sabihin, when we earned from selling of services, ang i-record natin, okay, is service revenue, professional fee, or income from fees. Other examples of income or the revenue, please check first yung line of business kasi doon ka magbe-base ng yung name ng income. Say for example, for the rent income, these are revenue earned from renting out commercial spaces. For lending money, tawag natin dyan interest income. Okay, earned by real estate brokers, insurance agencies, ang tawag naman natin doon ay mga commission income. And if ever we have some selling of goods to customers, merchandising man yan or manufacturing, tawag natin doon ay sales revenue. For this sales revenue, we have also the contra revenue accounts. Okay. We have sales returns and allowances and the sales discount. So, pag sinabi natin contra revenue account, we have to deduct those accounts from the sales revenue. Sabi niya, both sales returns, allowances, and sales discounts are deducted from gross sales to arrive at the net sales. Okay. Last element of accounting presented naman in the income statement are the expenses, which decreases in economic benefits. So, ito yung mga outflows natin of resources. Common examples natin, yung mga advertising expense kapag may mga publications on newspapers. Okay? Communication expense naman for all the means of communication. Delivery expense, ang tawag natin doon sa mga freight out or transportation out, okay, represents the cost of gasoline, oil, and other related expenses in transporting goods to customers. For the depreciation expense, di ba kanina, all the fixed assets subject to depreciation like buildings and equipment, okay, kinakailangan nating kumputan ng annual depreciation expense. Insurance expense refers to insurance premiums paid. Interest expense, those are costs of borrowing funds, also known as finance. Number 7, the rent expense, when those are charges on the right to occupy shop or any office space. Repairs and maintenance expense refers to the cost of repairing and servicing certain assets. Representation expense, cost of entertaining customers and prospective clients. Yung salary expense, those are the compensation or remuneration in whatever form given to employees. Yung sa mga supplies expense naman, cost of the ballpens, erasers, stationery, and other supplies used by the company. Taxes and licenses, okay, those are the business taxes and other fees due to government. Utilities expense, cost of electricity and water consumption. Okay, purchases naman, these are merchandise acquired or bought during the period. We have also contra purchase account. Tawag natin doon purchase returns and allowances and the purchase discount. Ibig sabihin, they must be deducted from the gross purchases to come up with your net purchases. Okay, number 15, freight in or transportation in. Okay, those are cost of transporting items bought for resale from its point of origin. And then, number 16, the cost of goods sold. Okay, those are value of items sold to customer, which is computed, okay, by adding beginning inventory, purchases, and freight in to come up with goods available for sale and deduct ending inventory. So, for this cost of goods sold, kakaroon tayo ng madaming computations dyan pagdating ng manufacturing business. After presenting the different elements of accounting together with the accounting equation, okay, this is very important part of this slide because we will use the accounting equation as the guide, okay, in determining the so-called normal balance of the accounts. Normal balance means increase. Okay. So, take a look at the left part, that is the asset. Okay. When we say asset, the normal balance of this element is debit. So, using the T account, all asset accounts, on the left side of the T accounts, that's debit, and the right side, that is the credit. If there are some increases of asset, you have to place that one debit side. But if there are some decreases on the different assets, you have to credit naman. Take note, class, normal balance is the normal side of the asset, which is debit. Okay, on the right side of our accounting equation, that comprises of the liabilities and the equity. So, right side, the normal balance of the two are credit. So, take a look at this T account. The right side, which is the credit, that's the normal side. Okay, that's the increase side. But if ever, yung liability mo or yung equity mo nabawasan, nag-decrease, you have to place that one debit side. So, take notes. Take these 3 expenses in withdrawals. Use the guide just like asset accounts. Revenues, use the guide similar with liability and equity accounts. For contra accounts, di ba, na-discuss natin may mga contra accounts like allowance for doubtful accounts, accumulated depreciation, mga sales returns, sales discount, purchase returns, purchase discount. Okay. For contra accounts, their normal balance side would be the opposite side to which they are deducted from. Okay, for example, sales allowances, returns, and discounts are contra revenue account. Since they are deducted from the revenue, which has normal credit balance, then the contra accounts will have normal debit balance. Okay, more discussion for this slide. Okay, for the next module, that is for the module 3, the rules of debit and credit.